Let me though switch focus back to Indian corporates. Manan Shah joining us, Managing Director at Man Infra Construction. Uh, with regard to, of course, Q4 numbers, but also with regard to how FY27 is expected to pan out. Great having you here, Manan. Let me first start off by getting your take with regard to FY26. It's been a softish kind of a year when I'm looking at the numbers. You've degrown sharply versus your last 2 to 3 years in terms of the numbers that you've clocked. Some execution delays, or was this what was expected? And what should FY27 hold? Will it be materially stronger on the kind of base that you did maybe in FY23-24?
See, FY26 was a year where we actually had a lot of acquisitions happening in, and the results of 24 and 25, if you see, it's the results of the previous acquisition. So what happened basically is, in terms when you compare to revenue, a lot of our projects are in DM model where the revenue does not come into our books and where you see it straight hitting the P&L. And in case of FY26, that's what happened where a lot of projects are already sold and the cycle was just starting where we had acquired a few projects like our Marine Lines project, Tardeo project we've now announced, the Bandra project as well. So FY27, in fact, is the year where we see the highest amount of launches coming in. In fact, it's a year which is completely going to break all records where we are coming up with more than 1.1 million square feet of launches and more than 6,500 crore of GDV approximately. And our Miami portfolio is also going in very strong where we're anticipating almost at a group level the GDV to hit more than $1 billion.
Manan, can you also give us a sense of the kind of delivery that you're planning for FY27 in terms of completion of projects? Because you recognize revenues based on that, and what is the kind of cash flows that you are expecting?
So, in fact, our Ghatkopar project, which is Aradhya One Park, is near completion. By this December, we are anticipating the OC to be coming in. Atmosphere project is which is at Modern, is almost near completion, which should be completed by next year. The first phase of our Daisar project is almost about to get completed. So, all of these projects will generate a good liquidity over the next 3 years. In fact, we are anticipating around 1,000 crore of liquidity coming in comfortably. In fact, it should be much more. But to put on a conservative number, we are seeing 1,000 crore of liquidity cash flow, which is getting generated from these projects, which will be further deployed into the new acquisitions that we are eyeing right now.
And Manan, just from an acquisition perspective, you said FY26 was the year where you've continued doing acquisitions. What should, therefore, when should this revenue translate? Would it be FY27? Would it be FY28? Also, both pre-sales as well as collections have declined for you. So that's the other metric that you typically track. Would that also start to strengthen going forward?
Yes, definitely. FY27 and 28 put together, we've targeted at least a pre-sales of around 5,000 crores putting together. And you will see the profitability also going out. Like in terms of an outlook, if you want to say like we're expecting more than a 25% of an year-on-year outlook in the coming years, because now the quantum of the projects is much, much larger. The ticket size of the project is much, much bigger. So we see a good revenue coming in continuously in terms of profitability also. And pre-sales is also very strong. We ventured into luxury segment where the demand is continuous is what I'm seeing in the market, and that is what will result into better numbers coming in from FY27.
How are you looking at your EPC division and the kind of revenue mix that you foresee going forward from EPC ports and residential and commercial?
See, a lot of tenders have been bid currently under the port sector, and we are very, very strong contender in hopefully winning these tenders as well. Regarding the other side of the EPC, apart from ports, we do our own construction in-house. So if you see an overall number, we've got around 9,500 crores of our in-house execution, which will happen over the next 5 to 6 years of time, which will come in from our real estate projects.
I'm sure you would have faced some labor challenges as well in the month of March and April with respect to availability of LPG for them. Has that restored now? Is labor coming back, or will they come back after the Bakrid festival?
there were two, three things which were impacted. One was the West Bengal election, which were happening. That is when a lot of laborers had gone back. Then we also saw the war situation, slightly making the laborers worry about the gas supply. But now things are very, very smooth. In fact, we've done a lot of setups in our labor camps itself where they don't have to worry about the basic facilities and needs. So that is what will strengthen even furthermore. In fact, more than 60% is already resumed back as of today. And I think in next 1 month's time, we see a full supply coming in back.
You've still clocked a profit, despite the revenue decline that we've seen. Is your cost structure largely on a variable structure, fixed cost element probably very low? Is that the right way to kind of look at your business?
So I would say a lot of our projects are under JV. So what happens is when the company goes into the recognition method, you will not see the top line coming into the books. And the same problem happens when we are working in DM models. So a lot of times people try to see that your revenue is declining, but what you would ideally have to track our company, Man Infra, is usually through the bottom line because I've got 3 projects under DM model where nearly around 6,500 crores of revenue will never be seen into my books, but the profitability from these projects would come in. So I would say you rather see a bottom line growth, which is going to be from FY27. And with the year of launches that is planned for the next couple of years, we see a good growth rate of nearly more than 20% at least year on year happening.
So more than 20% growth rate over the next couple of years. That's what one should pencil in. But that will still get you to maybe a top line of FY23, 24, 25. It won't help you exceed that. What's the pipeline therefore looking like? At what point does the effective growth, maybe FY23 versus maybe FY29, FY30, start to go above the 300 crore number? When should that happen?
So the 300 crore number was the bottom line, which you're mentioning about, not the top line. So the top line, like I said, will definitely be, you would see more or less like a flat line on the top line because, like I said, the revenue will not come into my books. But regarding the profitability, we are seeing a good number from 2028 comfortably coming in. In fact, 2027 also, you would see a significant growth coming in because we are very confident on the launches which we've planned and the projects which are near completion, generating a surplus cash flow that will also be put in back into acquiring newer projects. So I see a cusp breakthrough by FY28 comfortably.
100 crore profitability FY28.
I could not catch you.
Would it be above 300 crore profitability FY28?
I'm confident that we should be able to.
Okay, sure. Your Tardeo 2.0. What's the vision there? How do you execute? What are the timelines you're looking for? I'm told that you're looking to make Tardeo the new Lower Parel, if at all. So give us that sense.
See, I would not like to honestly state Tardeo as Lower Parel because Tardeo is not that cluttered compared to Lower Parel. And that is a very specific reason we chose Tardeo as a location because the roads are wider. You've got a good mixed gentry over there in terms of the ticket size, in terms of per square feet, also much, much higher than Lower Parel. But yeah, we are seeing Tardeo as the new billionaire's row. That was what we would like to call it, where a lot of beautiful projects are coming in. The entire micro market is getting developed, where we have focused a lot of projects over there. And Tardeo, in terms of the first phase that we've already launched, we are nearly at 40 stories. More than 50% of construction is completed. We are eyeing the first phase delivery of that building in FY27, and the rest will follow in FY28, which is nearly 2 years prior to the commitment deadline that we had given. So not just that it will be one of the tallest towers in the country, but one of the fastest constructed towers also. And, more than 50% is already sold in that building. That is also giving a healthy benefit to us in terms of the consolidation of the financials required for that project.
Okay, Manan, thank you so much for joining us and giving us that perspective with regard to the numbers as well as, in fact, the roadmap going forward, more importantly. Thanks for joining us this morning. Okay, viewers.